Hello traders, Gary Wagner here just after 12 o'clock in Honolulu, 6 o'clock in New York. It is Wednesday, 23rd day of September 2020, and this is the Daily Report for Gold and Silver. Although the dollar was responsible for part of the fall in gold and silver today, it doesn't account for the vast majority of today's sell-off. About $44 in gold. Gold currently at 1864.10. That's down another 430 from the close of New York. It's now open in Australia. We've got silver, which lost almost 7% on the day. And we've got the stock market that has been aggressively moving lower, the Dow down 500 points. We maintain a neutral stance in terms of gold and silver, and on today's show, we're going to talk about the exact prices we believe gold and silver could trade to if the selling continues, and that could present us with an excellent buying opportunity. But first, to the price board. In our opening letter, we really talked about U.S. dollar strength being a component of the sell-off that we have been seeing in gold. It is only partially responsible. Today, for example, we saw another dramatic decline in gold. December futures going to $1,866.60. That's a $41 decline, a decline of over 2%. When you consider that the dollar gained just shy of 0.5%, and we look at the sell-off in gold, it is quite obvious with simple math that 1.5% of today's decline was directly attributable to traders selling actively in the futures markets. So we saw a tremendous decline. Silver also declined, but in terms of a percentage drawdown, it lost 6.64% or $1.62. Currently, December silver futures at $22.89. We'll once again talk about the different support levels we're looking for in gold and silver. In terms of the other precious metals, platinum declined 2.7%, $833.90. And because of supply problems, palladium was the only precious metal traded on the futures exchange to actually trade higher, closing up by $4.90 at $2,234.50. We also in the article talk about the Eurodollar, and that has been falling greatly. It has fallen roughly the same amount as we saw in terms of gains in the U.S. dollar, and the U.S. dollar gained, as I said, about 0.4%, almost 3% since September 1st. Traders, let's take a look at our technical studies. On a technical basis, we spoke about the fact that once gold broke through its 50-day moving average, it definitely changed market sentiment. And that occurred really only 3 days ago. The chart that we're looking at is a simple line chart. It represents gold value on the top and, of course, dollar on the bottom. And we can see a very interesting pattern when we look at how this market is played out since the beginning of September, which I'll mark right now with a simple arrow. We had the dollar kind of spike lower at the beginning, and that caused gold here to spike higher. But then this most recent spike here has definitely affected gold because you can see the gold pricing has been spiking down. But as we've been talking about, although it is relative when we speak about the dollar index in gold because we're pairing gold against dollars, it's really selling pressure, recent selling pressure, that has caused gold to go down so quickly and so dramatically. Let's take a look at our first gold chart. We are looking at our daily gold chart, and we talked about the fact that we broke through the 50-day moving average. We're going to add that to the screen now. Now you can see that as a green line. And that really occurred on Monday of this week. Realize we had gold trading at about $19.60. We've seen it decline just shy of $100. And that has occurred over the last 3 trading days. Brutal days when we look at Monday. We thought the possibility that we might see some support come in at 1900, but I also spoke about the fact that if it breaks, it is a critical area because this is taking us out of the extreme bullish sentiment we had because it was trading above its 50-day moving average. Now, What are our targets? They're the same as I spoke about yesterday. If it cannot hold 1900 and we see further downside pressure, we certainly saw that today, the next real target I can look at is going to come in at around 1845. That is the 30% Fibonacci retracement. This retracement set in terms of the data used begins in March at the lows and comes up to the all-time new record high here that occurred, the second week of August at 2088. So that would be the next level I would look at. And I think that this has potential to have an area where we can see a bounce to the upside by putting up the 100-day moving average. And you can see the 100-day moving average really matches with this 38% retracement, much in the same way that the 23% retracement matched strongly with that 1941, and that's why I called them critical areas. I still maintain that we could see further downside, and I would look to see how it reacts if we do at around 1850 per ounce. As far as silver goes, there's a saying that a candle that burns at both ends does burn twice as bright, but lasts half as long. We experienced tremendous drawdowns in silver over the last 3 days. We've seen pricing move from the highs on Monday, the open on Monday at 27, to current pricing at 23. So we have seen literally a $4 decline in an ounce of silver. It broke through the 50-day moving average, and in fact, silver, as I said, has got stronger selling pressure. And so now that it has broken through the 50-day and has closed just below the 38% retracement at $23, our next target has to be 21.65, and that is the 100-day moving average, to as low as $20.87, so we'll call it $21. That would be the area that we could see silver drop if the selling pressure continues. The only thing that we had active was Nugget. We were stopped out on that. Details will be in the proper action section, but we have maintained a neutral stance on both gold and silver, and especially gold. I do think that there could be an excellent buying opportunity after we saw a little bit more downside pressure, taking gold pricing to approximately, call it 1850 per ounce. We're at 1866. If it doesn't hold this, we could go into a deeper retracement. And with those numbers in mind, we will maintain our neutral stance with no active trades in either gold or silver futures or the ETFs that have to do with the precious metals until we see where the dust wants to settle. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.